The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX and also the FTSE. These folks are not keeping up with the news. They're actually going down, believe it or not. Our market is still higher, as we can see, but these two are still a little bit lower. In a slight uptrend, they're basically in the middle of the trend, so we'll see, what direction it breaks out of. But they're certainly lagging behind the rest of the market here in Asia, here in the U.S., and then also in Asia. Also, folks, we will have Shane Smolian as our guest at 9:30. He's got some information, of course, on the Fed and some other great information that we need to look at. So those are just a few of the things that we've got to cover today. Tomorrow we will have Bill Meridian as our guest. By the way, folks, this gold and silver are really beginning to look quite interesting. I just want to bring up the silver here quickly to show you what it looks like here. We broke out of that high. You can see here that we had a 135 pattern down there at $18, and we've now gotten up to that price level of 1945. We did hit that. We backed off just a tiny little bit, but it's not acting bearish at all. What you want to be doing on this is to look for a place, to get long. So that's really what, because we had that big 3 drive in the gold, but we backed off only $17, folks, from 1830. Let's just get up here to show you what happened last night. We had a really strong support in here. If you want to get, technical with this gold, just go down to about a 4-hour chart or 4-minute chart. You can see the ABCD patterns. You can see the pullbacks, and it allows you to trade gold for just $3 or $4 instead of $8 or $10. So that makes it nice. After we hit that level of 1810, which was a Gartley pattern, we went all the way down below the end of the chart here. We made a low at 1811. That was an ABCD pattern, $17 or $18 off the high. So that's right on with 1/2 harmonic number. So that gold is still bullish as long as it stays above 1811. There's no other way you can look at it. And believe me, the way these markets are acting, anything could happen, and it usually does. Now, I've had a request to review something that we did during our full-day trading session way back on May 21st. One of the things that I covered during that time was, the cryptocurrencies and blockchain stuff. And one of the things that we were watching was a coin called Cardano. It's not a stock; it's a coin, and the name of it is Cardano. The symbol is ADA. And you'll see here where the blue arrow is. We were there on May the 21st. We were buying it at just a little below 6 cents a share, and as you can see here, we hit $14 cents in the thing. It's up at doubled in price here, so your $100 is worth $200. You can see the spike in volume here. The reason for that, folks, is there was a big announcement here a day or so in Cardano, and that is the fact that Charles Hutchinson, who's the man who's behind Cardano, is the man behind it, and he was the man who was the lead of Ethereum. But the key here that was really what's happened here is this, and let's get this up here so we can see what's happening. This is from Coin Market Cap, and this is I wanted to show you how quickly these things can change. But you'll see here on this first list of the top 10, Cardano's not there. It was down in around 30. It's up to number 6 now, folks. It's past Litecoin. So you got to pay attention to this. This is if you happen to be in that, you can put your stop at break even, and if not, just let it rip, because this has got a chance to be something really unique if in fact it does, because it can handle so many iterations and things per second. I'm understood. I get this all from John Jameson, of course, folks, as you know, but he certainly knows what he's talking about. But I'm just looking at the chart, showing you where it is. If you're in it, hang in there, and if you're not, buy it on a pullback. That's all I would be watching. So just keep a close eye on that one. I've covered the gold. I've covered the silver. Those are the main ones I want to cover. I want to do a couple others that I think are important. One of them happens to be the soybean market. Oh, I know I brought this thing up. I know I have it sitting here somewhere. Please, Larry, don't tell me I've lost it again. Shut the front door and raise the rent. I don't think this is it. This is not a good sign. Anyway, that soybean trade, as we have, I've got to get it up here, folks. Otherwise, I'm going to be in big trouble. Just give me a second. It'll only take me a second to get this up here, and we will get it up here so we can all see it together, because this helps me and it helps you. Well, whether it helps you or not, I don't know, but it helps me. Hold on a second. We'll get it up here, because I think we've got another move coming in these beans. It's going to be quite spectacular, and we certainly want to get ready for it. Let's get this up here. It will only take a second, and by golly, here's the second coming in here. We're going to get it up here, and we'll be able to take a quick look at it. And here we go. 5, 4, 3, 2, and 1. Oh, that's not good. Not good. Stop the music. I hit the wrong button. Okay, here is the daily. This is November soybeans, folks. You see the big ABCD pattern. This was on Monday. We recommended a short sale at 9.12. It got to 9.12 and a half. We backed off to 8.95. We came down 17 cents. That's the harmonic number in soybeans. And so we will be looking now, because it's so close to that lower bottom there at 8.94. So it's only a penny off. So we're expecting the market to rally now. So what we'd like to do is to see the market rally up to about 908 and then pull back down to about 890, completing a perfect ABCD, which will also be exactly equal to the last retracement we had between the 22nd of June and the 29th of June. That would line up perfectly. It's a perfect ABCD, and it would be at a 382 retracement. Now, if we get that, that is an ideal situation, because you have a higher trend, you got higher bottoms, of course, higher tops, and you're buying at a 382 retracement, the most powerful of all the retracements that you can get. And so those are the ones that you want to be watching. So let's keep a close eye on this November beans, because it's got a chance to do something pretty spectacular. Here we've already rallied up to 905 here. We're at that number right now. Overnight, we went from 897 up to this. Actually, the low was 895. We've rallied 10 cents to 905. So this is a key level now where it opens, because if we get above 912, folks, this market's not going to back off very much. So let's remember that. I've got some information about the stock indices that I think is valuable, but I'm the only one that thinks that it's valuable. So if you're interested, stay tuned, and I will give that to you right after we have the break. The open interest in what's going on with these stock indices. To me, it's interesting, but to the rest of the world, maybe not. Remember, we're going to have Shane Smulyan on in 15 minutes. Tomorrow is Bill Meridian, Cycles Research. Always a great show. He'll be on for a little bit longer time frame tomorrow, because he's got a lot of information to get to us. So that'll be fun to listen to for tomorrow. So we'll be right back after the break, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I put the chart up here of the NASDAQ. It is for the last 8 days, we've been up. I think this is the 9th straight day we've been up, 8th or 9th, I believe. I heard somebody say that on Bloomberg today. We've exceeded the 10,700 level, and that was the top end of that 1.618 range. Open interest in all of these stock indices, folks. NASDAQ, Dow Jones, Russell, and the NASDAQ have all been dropping. The NASDAQ had a big drop in open interest yesterday. Also, so did the S&P. I mean, that's negative, folks. I know it's hard to believe, but that means there's not new buyers coming into the futures markets. How long can this go on? It can go along a lot farther than you have equity. I can promise you that. So, I'm just telling you that that's what it looks like. We've seen this in Treasury bonds before. We've seen it in gold, and we've seen it in a few other things. So that's the main thing to quite remember. Also, we're not seeing massive increases. We're seeing slight increases in open interest in silver and gold, but nothing dramatic. And in fact, over the last few days, it's been virtually nothing. So this also reeks of short covering, but we don't know that. It's breaking into new high ground. So you have to follow what the market's telling you to do. So, it's got a positive buy. Watch a $32 break. Watch 17.98 in gold, because if it holds 17.98, folks, that could be one heck of a move. So watch it very, very closely. I think it's important to look at that. Do you remember we were watching the natural gas yesterday to see if it was going to hold that level? Let's just see if it was able to do that, and it certainly did. Yes, we went down and we rallied $8. If you remember when we were watching that, it did exactly what it had done previously. So that's one of the reasons why being a technician does give you some pretty good advantage advantages because you see what's happened in the past. The market repeats itself over and over again. This was proven in Dr. Andrew Lowe's book, The Non-Random Walk Down Wall Street. The markets repeat over and over again, and they do it with a degree of predictability, and that in itself is a huge advantage, and that's what you try to do when you're working as a technician, is to try to do that. So that natural gas is still looking good. We held the 182. We got up to 189. We're trading at 187.60, so it's still acting pretty good. As long as it doesn't get below 180, it's still very, very bullish, just like gold staying above 1811 is very, very bullish. Now, these are shorter term, but these are the things that allow you to get in the markets without risking an arm and a leg. I hope that description helps of, what we're watching as we look at some of these things. Now, there's another market that is hanging on by a thread, and I do mean a thread, and that is the U.S. dollar. And this is going to be interesting to all the markets if this dollar breaks, because if this U.S. dollar cannot stay above 96, we're trading at 96.40 this morning, and if we can't keep this above 96, which would be the 78% retracement, we're down now 1, 2, 3, 4, 5, 6, 7 days down. That puts it in the 85% category of getting ready to rally. But if we go below 96 in that U.S. dollar, folks, that means that's going to break down. And the reason for that is you'll see that the last rally that we had was basically a 10-day rally up, and it only made a 382 retracement, which was exactly similar to what happened between April the 27th and May 11th. Those were identical. There's another perfect example, like in the natural gas and in the gold and the silver. They just repeat over and over again, and that's what you try to do when you're a technician. Is that's your edge? Is what watch what's happening. Trade what you see, not what you think. That's the whole thing. We start thinking, you really get into a little bit of a trouble, as I've proved over and over again over the last 13 years here at TFNN. All right, let's remember that, because we've got a situation here in the gold that we could hold this 1811, but the key level would be at 1798. Very, very important to watch those. First, someone was asked a question about the open interest. How do you know that that's going to not continue? Folks, open interest could keep dropping and dropping and dropping, but once it's over, there's no more buyers, and then that's when the market has a vacuum in it. Remember, we've had vertical moves. We are looking at vertical moves in Tesla, Amazon, all of these stocks. They're all making the NASDAQ stocks are. And when you take the NASDAQ stocks, if you take the top 5 NASDAQ stocks, you've covered over 50% of the whole NASDAQ 100 just with 5 stocks. And, stop and think about what Microsoft's up 200%. That's a heck of a move. So, and that's not a small stock. That's a huge stock. So just remember that that's what's happening. And it says someone's saying something about there's a lot of people unemployed everywhere, Ruby. So that's no question about that. When we go through Tucson here, we see many of our the Red Lobster, which is one of our favorites, has closed down. That had opened for a little bit. Now it's closed down again, and a couple others have done that. But we usually stay in and eat. We maybe eat out one day a week, and we always go for something real early, like at 3 or 4 o'clock. So that's pretty much what we're trying to do here. We're going to be looking at some of these things here. Let's take a quick look at what the markets are doing here this morning as we come into the opening time, where they got the NASDAQ still up near the high. The S&P still near the high. Now, the S&P still has a chance to complete a Gartley up there, folks. I don't know. It has to get above 3180 in order to break through the 786 there. It hasn't done that yet, but 3180 is the key level in the S&P to look at today, and we'll watch. And the key level in the NASDAQ is very close to where it is right now, and that is 10,750. So that's one of the numbers that I'm watching closely in the NASDAQ today. So those are the main things that we're following here this morning. I just want to show you what happened yesterday. I posted this before we left the air yesterday, I believe. Let's get this up here so we can take a look at it. This was the AI forecast for yesterday, and as you can see here, it made the low exactly at the 1130 level and then had a nice run up. We pulled back, as you can see, to a 61% retracement, and then away we went, closing higher on the day and getting as high as 31.72 overnight. So those are the main thing. The reason why that notation of the 31.20 is being so important is because if it goes below that, then it works. You're absolutely right. Patterns are great when they work, and when they don't work, they're not so great. That's it. All right, we'll see what's happening to some of these things, but we'll be looking at them one at a time as we go through here. One other question is about the soybeans. We're trading at 9.05 this morning. If we get above 9.12, that tells you that this hot weather is really getting bad. I got an email this morning very early from Rich, and he was telling me that it is really hot in the areas that he's watching from the beans, and there's very little rain. So if that continues, we could be looking at some fireworks in these grains, and we will have to figure out step one to get into. But the beans made a nice 61% retracement sell-off from 9.12 down into 8.95, and now we're bouncing back a little bit. The key level is if it gets above 9.13 in that November bean, that means we could really start to run. Boy, when I say words like 9.13 and beans have been as high as $18, folks, when I started trading soybeans, they were trading for $3.04 a bushel. 877-927-6648. Stay tuned to the Shane Man. The wolftrader.com will be coming up next.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're on the air with Shane Smolian, thewolftrader.com. How are you, my friend?
Is this the office of Duke and Duke?
Well, it used to be. That's the offices of Flim and Flam. Right now, the offices of Dewey, Cheatham, and Howe. We've been turned into a legal operation. Hey, go ahead, my friend. Take the mic.
Okay, so I'm going to start out with the Fear and Greed Index. And this is just an overall view of market sentiment. And right now, we're still pretty neutral. We're at about 53%. So this isn't really giving us a clue one way or another. It did get up to 67 in the recent peak, but we know that this indicator can get up to levels of, above 95%, and that's what we saw at the market highs around January, and then on the lows, it can get all the way down to less than 5%. So this is a summary of the Fear and Greed Index over time. This was the recent hot peak here, right around January. And then this was the March lows. And so we're kind of right here in the middle. So this isn't really giving us any clues in terms of the direction of the markets, but we know that it's definitely not overbought from this perspective. So from this perspective, it could definitely go higher. There's definitely room. But again, that's just one perspective. So I'm going to look at these different tools that we have here to forecast. And so these are the tools that come out with the newsletter. So most of you know about the Fed juice and the Catmaster signal. The Catmaster signal is a combination of many different cycles and transits into one. But we actually have a new one now called the single transit clusters, which identifies individual transits that cluster around moments in time. And then we have the daily statistics, which we look at for different days of the week. Like what's the strongest, what's the weakest day of the week. This is an example of a single transit cluster. These arrows down here, this is using Alfie's software, Air software. And what this does is it searches for thousands of transits, and then it finds the statistical probability that over time that they're true. So this is the recent drop in the NASDAQ in June the 11th. And this actually, this learning curve actually stopped before the drop happened. And you can see that there was a bunch of down transits clustering right before this move down in the S&P on the June 11th. This was after that first eclipse. So we had the first eclipse, but this is different because it picks up, it searches thousands and thousands of transits, and it finds these with statistical significance. And so it picked that up, and then it picked this rally up into here. So this is just another tool that we use on our service now, and it's available for everybody in every market. But it just gives us, really gives us some pinpoint accuracy in terms of the daily turns on the market. So let's talk about the S&P 500. So first of all, I'm going to start out with a weekly time frame here. On a weekly time frame, the Fed juice has never faltered. It's still strong. And so even though we've had these, these daily time frames that we trade, which are, up and down and up and down, this has really just been a very consistent model of success by the Fed. And so I'm feel very comfortable with this. There's occasionally it backs off a little bit, like we saw a little bit of a back off, but for the long term, these longer term maturities, these are really, really stable. And so I feel good about the market on the long term from this weekly perspective. And so this is a chart here of the S&P, and this is what we're looking at right now. So let me just put this into context for everybody. These different arrows mean different things, each different color. I know it looks like a little bit of a Christmas tree, but let's start with the Fed juice first here. That's the red arrow here. And the Fed juice yesterday just went into a buy here on the chart. So what happened was this market has been exceptionally strong here. So you had the Fed juice in a sell, you had the planetary speed index in a sell, and then on a couple of days ago, you had the single transit cluster in a sell, you had the cat signal in a sell, and it only went down for a day. So we had a very small short position there, which covered yesterday. But this market is really telling us that it wants to go higher. And I don't think it's just the S&P. I think we're starting to see inflation and the first signs of it. And I'm going to show you some charts to explain that. So beyond the S&P, the S&P is something that I watch because the Fed targets the S&P, with the Fed juice. But I didn't expect the other markets to also start to have this inflationary effect now. And there's some reasons why I think this is happening. So on this S&P, right now, I'm just sitting out. But on the 10th, on Friday, there's going to be a chance for a long trade here because the Fed juice just crossed up. And you have a lot of these Astro and different types of transits turning positive on Friday. So I think on Friday, we're going to have a chance now at a long trade. And I think this market is really, really strong. And we've seen that with the NASDAQ. The NASDAQ is pushing to these crazy levels. So I think the S&P is not that far away from pushing to highs. Now, this is a daily version of the Fed use. Now, this one is more sensitive than the weekly one. And it has been, the Fed has been tapering a little bit on these asset purchases, but the market is still holding up very strong to this. So any little turn or jog up here in this Fed juice is really, I think the market's really going to take that to heart and going to have some fuel here for a rally. So I think things are set up here, at least on the next week, for the market to be in positive territory. These were just a few of the recent, I call them advantages, when the market has an advantage to move that we've had. So this is going back into June. So this was a long here that went up and covered here. This was that was in May. This was in June. This was a long here that covered here. This was a failed short in the end of June here that covered here. And then we just recently had this tiny, tiny short here. Actually, it was down. It made about 11 or 12 points. But you can see that the ease of movement, if you just take a look at this, the ease of movement is to the upside. The market is wanting to go up, and any type of short that we have into here is very, very slim pickings. It is that S&P is just a brutal market to short. So we can look at the S&P on a relative comparison. So what I like to do is look at other markets. So this is the S&P versus tech stocks. So this is Apple here on the left. So this is Apple. And this is the S&P, and down below we have the relative strength. So this tells us the relative strength versus these tech stocks, and it's pretty good right now. So that's a good sign. Google is relatively flat, but the S&P is holding up okay right now in terms of the tech. The only one that looks like troublesome right now is the banking sector, which is very weak. If we look at the S&P in terms of gold, it's strong too. So some people believe that the true price of the S&P is in terms of gold. So this indicator down here will tell you the S&P price in terms of gold. And it went into a buy a few weeks ago, and that is still looking bullish. So on the weekly time frame, the S&P looks very strong, and the Fed juice continues to look strong. So, normally I'm just focusing on the S&P, but I think now what we're starting to see is inflation. And so, yes, it's very possible, and I'm going to lay out a case here for inflation. I have not seen this since 2008, since I started this service. I have not seen this. It's a very odd situation, but I think we've been catching these trends using the Fed juice.
We'll be right back, folks. Stay with us. Shane Smolian, wolftrader.com. We'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, with Shane Smolian, wolftrader.com. Continue, my friend, please.
Okay, so this next slide is about inflation. So inflation, yes, sir. I think it's happening. And I've never seen this before. So it's something new. We got to watch it day to day. But multiple markets are rallying now together that are normally inversely related. They're not inversely related right now. They're all going up together. Multiple markets are rallying ahead of their cycles. The original QE did not make it into the economy, but this round, which includes direct stimulus to the consumer, corporate credit facilities, Main Street lending facility, and the TALF, which I will talk about if we have time here in these slides, it is making it to the consumer. So I'm going to make a case here. I'm going to start going through these different markets. So first of all, this is copper on the daily. Now, most of these markets have been in the downtrend for 10 years, except for the S&P. I mean, copper kind of went back and forth, but most of these commodities have been down. So we've been, people who are talking about the end of the world coming, this has been going on for 10 or 15 years. So, I mean, maybe we're at a bottom here. I mean, maybe we should be looking at it that way. I mean, copper had been in its downtrend, but it blew through the 200 and the 500 moving average. This is a chart here of just the incredible bullishness of copper. Now, copper is very important because copper is one of the leading commodities for economic turnarounds. So you want to see copper rising for a positive economic environment. And so this is huge. I mean, it's pushing through these RSIs of 95, and the Fed juice down here. We have a Fed juice for each symbol now. So it caught this rally on May the 20th, and it's been in a buy all the way up on this rally. So the Fed juice caught this, but this to me is the most impressive of these rallies. Now, if you look at copper, copper is just coming into some seasonals now. It's still got quite a ways to go. I mean, this is the solar cycle on copper, and this rallies all the way into the end of August. So, it's like I said, it's rallying ahead of the cycle turn. So this is extremely bullish. I mean, this is, when you start to see these going up ahead of a cycle, that's what I call a positive relative market bias. And it tends to keep going up. Now, the TALF, let me talk to you about the TALF. I know we have limited time here, but this is a certain type of a facility that the Fed uses to facilitate consumer loans. Okay, auto loans, student loans, credit card loans, small business loans, just tons and tons. Now, they're going to make up to $100 billion of loans available, and these are non-recourse loans to the borrower. So non-recourse means that they can't go after the borrower if they default. They can just take their collateral. They can't go past the collateral. So just very quickly, I know this is a complicated flow chart. I try to simplify this down, but the idea here is that if you want to get a loan, okay, you're here, you're the consumer, you want to get a loan, you go to the car dealer, and the car dealer has a finance company, right? So the finance company needs the cash to loan you the money. So how do they do this? Well, they take all their loans and they slice them up into these things called asset-backed securities. And they need investors to do that, right? They need investors. And so, usually the investors buy these and then you get your money for your car. But when you have these economic problems, what happens is the investors, either they run out of cash or they can't get the loans to buy these ABS. And when the ABS can't get bought, there's no loans going out to anybody. So what the Fed does, the Fed comes in with the TALF here, and the Fed comes in and loans the investors the money, who can then turn around and buy these asset-backed securities, and then it continues to keep this flow going. So that is I think this is very important, because now you're starting to see this inflation make it into the marketplace. Now, this actually happened in 2008. They're expanding it now again, but this is important because without the TALF, the credit markets would have ground to a halt. I'm going to go into gold now. Gold is bullish. Okay, so we know that this has been on this, even on the long-term time frame, the 200 and 500-day moving average. It's continuing to just rip and roar higher. And the Fed juice is also catching this too. If you take a look down here on this Fed juice on June the 16th, on this most recent leg up, it caught this rally up into here. And we've been long on this since early July on gold. And so this is just continuing to look bullish too. So no matter what market you look at, I mean, if you look at copper, silver, gold, natural gas, oil, corn, I mean, they're all going up, and even the bond is rising. So everything's kind of going up right now. So I think, I really think you're starting to see some inflation. And I think the Fed is watching this. I think the Fed knows this. I know eventually this will make it into the market. Now, gold, we're just coming into the season for gold. I mean, we're just starting the positive season. I mean, hasn't even really started yet. So it just started here in early July, and this is the season for gold. So think about this. Gold is rallying ahead of the cycle, and that's bullish. So this is interesting, like I said, because I haven't really seen this too much. This is not something that we see. And so, again, the S&P here, this is a long term of the S&P. That's a bull. This 200 versus 500 never really faltered. I mean, it really stayed in line even during the decline here. So you got a bullish situation there. This is a chart here of the TALF, and I just want to point this out, that during the 2008 to 2010 recession, it took them 71 days before they announced the TALF to help the consumer. And these spreads on these asset-backed securities were huge. It was 1,600 basis points at one time. And then it came down. So that took 71 days. I want you to look at this time. This time, when you had the shutdown, this is actually 2020 now, okay? When New York began its lockdown, you only had a period of 3 days before the Fed started the TALF. And look at what happened to the spreads. They were up to 350 basis points, and they came down to 200 right away. So the Fed is on top of this, and I think this is huge, huge, huge for the economy. And this is important to understand that the Fed has all of these different facilities to specifically target markets, and that is important. And that's way more important than just buying treasuries, okay? Because everybody talks about that in the mortgage-backed securities, but this is important because the asset-backed securities, that's the consumer. This is not a mortgage. These are not, these are just everyday loans, student loans, car loans, that the consumer needs to keep the economy going. So this is corn. This is another one here that just ran up, and you can see the Fed just caught this on June 26, and this is now starting to rally up. And corn has been in a vicious bear market. It's been the worst of the grains of all of them, and you're starting to see this now on corn. So there's still a very large burden of proof before these assets can show that they're actually in a long-term inflationary trend. But corn has been in a downtrend on the solar cycle, and it's still relatively in the down, and it's trying to go up during a down cycle. So what does that tell you? It tells you that there's some inflationary pressure there to the downside. So, again, my whole point here is that if you pick your market, pick your market, they're all going up. Okay. So, and to me, that's something that we haven't seen in a very, very long time, and that is important. So I just want to put everybody's attention to the fact that this is a new phenomenon, and again, it could end, but from what I see right now, that this looks very bullish, and that's good for the economy, people. When you have economies too much of it's not good, but when you're starting to see this in this type of a situation we're in, that's a good thing. So that means the Fed has actually now figured out how to diversify their stimulus packages to target specific markets as they come up.
Stay with us, my friend. We'll be right back with Shane Smolian, wolftrader.com, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We have Shane Smolian on the line, and we have a question for you, Shane, and that is, do you ever consider the velocity of money, which used to be important many years ago? Does that figure into any of your equations?
Well, because we've become such a credit-driven society now with the Fed, they stopped tracking a lot of those indicators. So what I track now is the operations of the Fed, which is essentially tracking the velocity of money. So, for example, when you get, if you don't have, credit is money, and so you got to make sure that the credit markets are not freezing up. And so what I track is all these various operations of the Fed and the credit markets, and they want to make sure that that's functioning. And that is the most important thing to follow, in my opinion. I mean, that's because they're so specific now that's what we really got to follow. And that's the TALF is a big one, man. That's a big one because the consumer needs to keep going.
Well, that makes good sense to me. We've only got a minute or so left. Can you tell the folks how they can reach you?
Sure. For those of you who don't know, I'm Shane Smiljan, and you can reach me at shane@wolftraderfutures.com. And the website is www.wolftraderfutures.com. And thank you very much. This is the newsletters that we have. We have 5 different newsletters. They're each $39 a month. There's a 7-day free trial. You have the S&P, metals, energy, currencies, and cryptocurrencies. And we actually have a new messaging service now for newsletter subscribers, so you can get these updates come to your phone as a text message, like when there's updates or changes. So I think we're definitely improving this each month. There's a lot of new features to look at, a lot of different ways you can analyze a market from longer term to short term aspects. This is the website here. So if you go here up at the top, up to pricing plans, that's where you would sign up for the service. And then up here, these are the different logins for the different newsletters. There's also a free email list. So you should definitely go there and sign up for the free email list. And if you go there, you'll get updates about different things that are going on, throughout the week and the month and the upcoming newsletters. And of course, we have social media. So if you want to reach us, you can reach us on Twitter or Facebook.
Thanks for joining me, my friend, and we'll have you on again soon. Live every day in an attitude of gratitude, and may God bless.